Now, I understand that the BRICS hype has kind of died down a little bit, but I wanted to put out this warning that the BRICS global dominance has begun, it is underway, and the trend is not your friend if you are middle class in America, just trying to make it, just trying to make a living, provide for your family. You're going to get left behind. Now, most of the masses are completely asleep. And when you bring up BRICS, they don't know if you're talking about the stone bricks to build something or what we're talking about here in regards of a global alliance that is much bigger than just the 5 members of BRICS. Now they've got 6 that are joining January 1st, 2024. So it's going to bring the group total to 11, but you have dozens more that have applied. And then you have dozens on top of dozens that have dropped the US dollar. And that's why I say the trend is not your friend if you're average middle class in America just trying to get by. And even for the more well-off even, right? What you're going to see here is if you're not positioned, if you're not hedged correctly, you're going to get left behind. This isn't the train has left the station. The train is already long gone, and now it's accelerating. And so we're actually past the point, of no return, but there is still some opportunity to save what you have left. Most people already took the 401k haircut last year. You were seeing many folks trying to figure out, how do I preserve the nest egg that I created? And then you have many folks like myself who are just trying to make it, right? And with every dollar that I make, I'm wondering, well, what should I do with this dollar that I know is being devalued by my own government, which I'm going to show you that's the situation here in America, and Biden telling us that we have the strongest economy ever, versus the rest of the world, which is dropping our dollar, dropping our bonds at the fastest pace in decades, and they have real commodities. And what do we have? Right? We have fiat funny money, and we have the largest military known to man, which, is something to be considered. But in this video, I want to break down the warning that I've been trying to get out to many people. Cutting through the hype, cutting through the BS. Many people think that this is a nothing burger. And then on the other side, people are hyping up BRICS. BRICS is basically going to, destroy the US dollar. It's not about destroying the US dollar. It's about taking market share. It's just like you and your competitor and whatever your business is, they're taking market share. You're not going to be making as much money. You're not going to have as much profit at the end of the year. Now we have in the reserve currency game, we have other alternatives that are presenting themselves. And the Bitcoin bros come out and say that Bitcoin's the future. The XRP army, like myself, treat their XRP like a reserve currency, and we think that it might be doing something. And then you have obviously gold, silver, and the real commodities that back these economies. So without further ado, folks, let me get right on into this for you guys here today. Starting off with this one from Gold Telegraph. The deals here are not only getting done, it's accelerating. One of China's 4 biggest state-owned banks opened its first branch in Saudi Arabia this week in a move to expand the use of the yuan. The foundation is being laid. We are watching the world order change in real time. So not only are they getting countries to take out debt denominated in their currency, which is a big part of the game, they're actually setting up banks within these countries, which, once again, every time we talk about Saudi Arabia, I remind everybody, they're supposed to be our ally. They're supposed to be our friend, and they are turning away from us every chance they get. A Russian diplomat says a common currency is something quite possible in the future, and that Turkey is eyeing BRICS with great interest. Commodities. And I would also add distributed ledger technology that can serve as a neutral bridge currency like XRP. And as I've shown you guys, if you haven't already checked out my BRICS Loves XRP playlist, I put that playlist up there, and I'm going to be uploading more. I've already shown you guys how XRP ODL is live in 5 of the 11 countries that are now within BRICS, and many of them have actually shown interest in XRP or have spoken with Ripple. But in regards to a common currency, folks, we have to remind ourselves, I have to keep telling folks, I wasn't expecting them to announce a new reserve currency necessarily, but the acknowledgement of the trend of leaning into gold, leaning into silver. These are the common currencies that they already have. Now, what else do they have in common? Real world commodities that actually run the world. Now, to put it into a visualization here, we have this BRICS expansion visualizing the 2023 BRICS expansion. And as you can see right here, this is why we say this is the global dominance that is beginning. Because in some of these regards, they're about to surpass over half the population is going to be within BRICS. So if you look right here, the share of global GDP is going to be at 29%, with Saudi Arabia is the only trillion-dollar economy being added to BRICS. So you have $1 trillion worth of GDP in the Saudi Arabia economy that's bringing that BRICS total to nearly 1/3 of total GDP. And then you see population is at 46%. Ethiopia is a new member country joining January 1st, 2024. And high population over there, bringing the total to 46%, about to surpass half the world's population will be within these countries. But then this is where, this is the big one right here, oil production. 43% of the oil production, nearly half. The addition of Saudi Arabia, Iran, and the United Arab Emirates will more than double BRICS share of global oil production. And as I've been showing you guys with the price of oil going up, this is that real world impact where they don't have to fire one single shot at the United States to bring us to our knees. And Joe Biden just filled up the Strategic Petroleum Reserve. I think that was last week or at the end of August. Nonetheless, in the last couple of weeks, he's, temporarily added a little bit back to the Strategic Petroleum Reserve, that same reserve that he drained in order to keep inflation down. He was temporarily, keeping things afloat here by, temporarily keeping things going by draining our Strategic Petroleum Reserve. And this is, oil's approaching up to $90 per barrel now. And so instead of picking up our oil at $67 to $70 like Biden had wanted to, here we are picking it up over $80 per barrel, right? And so this is what we're talking about in regards to BRICS global dominance beginning. It is here. The export of goods obviously dominated by China with 25% of the world's export of goods, and the BRICS share of global exports will increase slightly, continuing to be led by China. Obviously, China is the big mover. And the key thing that we have to understand, right, is that BRICS is made up of 5, right? Brazil, Russia, India, China, South Africa. Now we have another 6 countries joining, but we have dozens more that are applying to join BRICS. And then we have dozens upon dozens, past that have simply moved away from the dollar. And so when we move back over to the United States and we see what's happening over here, well, we have President Biden saying that the U.S. has the strongest economy in the world. And this is the delusion that they live in, if we want to take them at their word, or this is the outright lies that they continue to perpetuate on the American people. Most of you guys understand, right, that this is just a facade. This is just an actor playing his role on the world stage in regards to Joe Biden. But real Americans are going to get, going to get wiped out by the setup here. See, this is what's happening in America over the next year and a half. Biden's going to continue. They're going to continue, hopping him up on whatever, pushing him out there, giving him the few talking points. And he doesn't know where he's at. He has no comprehension of reality, what's actually taking place in the economy, how you are being impacted at home. But he's going to come out and say that we have the strongest economy in the world. He's going to say that Bidenomics is working. He's going to say that we're bringing back more jobs, even though most of the jobs coming back are just jobs that were temporarily gone from COVID. And now we're bringing it back, right? And so the whole thing, remember, the last 7 quarters of job numbers have been revised down. Inflation ticking back up. The Fed being forced to continue raising interest rates at the fastest pace in history, effectively killing us. And so the Fed's rug pulling us while Joe Biden's touting the strongest economy in the world, while we get to experience a financial tsunami and chaos for the next year and a half, or a year and some change, I guess, until we get to the election next year. Now they're getting ready to shake it up. And this situation for the United States fiscal situation is just continuing to deteriorate. And it is not sustainable. On June 2nd, the debt ceiling crisis ended after Congress lifted the debt ceiling. At the time, total U.S. debt was at $31.4 trillion. Now the U.S. debt is at $32.7 trillion, up a massive $1.3 trillion. This means the U.S. has added $13 billion per day to the national debt since the crisis ended. The daily U.S. interest expense is set to cross $3 billion, over $1 trillion per year. The debt crisis is far from over, and actually, the interest on our debt actually is going to well surpass over $1 trillion, right? Well over $1 trillion, and that's just on the interest. And then the deficit that we're running is absolutely massive. We've added $1.3 trillion. Now, the other problem is that we're wiping out we're wiping out assets in the form of student loan debt. See, the student loan debt is one of the biggest assets the United States government has, but by forgiving it, right, we're removing that asset on our balance sheet, which, what does that do? That hurts our balance sheet even more. And we talked about this when the Fed started to say that they were going to do quantitative tightening and offloading their balance sheet. I was asking the question, who the heck's going to buy all these treasuries, all these bonds, as we had the worst year ever for bonds last year? And this situation will only get worse. And over the next year, like I said, they're going to run this thing up. They just decided to send another $1 billion to Ukraine. No questions asked, right? Just continue waving that flag and support the military industrial complex, right? And what's funny to see is all these folks getting caught up in that, right? It's just, for me, it's not political. We cannot be getting entangled in all this. It's wrong, but also we can't afford it. I don't care what your program is, whether you want to send 100 billion plus to Ukraine, or whether you want to forgive student loan debt, or whether you want to give money to somebody else because they've had a rough life. We are broke. There's no more money to give. And if we print the money to give it out, we're just going to destroy the dollars and the value that we have. And we're going to accelerate the process of everyone around the world not only laughing at us, but laughing at us as they go to the bank. Because just like OPEC is doing right now, they are laughing at us. They are laughing at the West for going woke, trying to do all these new Green New Deals, while they just cut production on oil, take oil back up to $90 per barrel, and destroy the U.S. economy, bringing inflation back in a major way. And that's what's happening here back home. And while Biden touts the strongest economy in the world, the real situation is that we are trying to avert another banking crisis. And actually, the banking crisis is still going on, right? They're just trying to, stay alive is what's taking place. This is essentially the overnight, the emergency bank funding facility, the reverse repo, is the overnight lending program that is supposed to be used to, cover these loans, these short-term loans that these banks give to each other. And the Fed has set up this facility as just another way of injecting liquidity into the system and keeping things afloat. Now, is this a form of inflation as far as growing M2 money supply? No. So this is where the economists that want to, come on CNBC and say, well, M2 money supply is actually going down. Well, yes, doofus moron, but look at what the Fed funding facility is doing. It's going to all-time high. So what are we talking about here right now? And I've been hounding on the banks and, the 600 billion of unrealized losses on their bonds, the 1.5 trillion of commercial real estate that's basically bust, the hundreds of trillions of toxic derivatives on their balance sheet. This is a big problem, and they're staying afloat through this reverse repo market. And once again, we have our talking head, commander-in-chief, coming on the stage to tell us that we have the strongest economy in the world. This is a setup for the American people. And when you look at this is what, folks that are tapped in. They're not necessarily Biden supporters, but you got a group of FinTwit bros, financial Twitter, and these guys want Jerome Powell to give up and, cut interest rates, ease up on us, please, Daddy Jerome Powell. Please ease up on us is what they're begging Jerome Powell. And they have blinders on when it comes to this overvalued stock market. They are justifying that NVIDIA is trading at over 200 times earnings, right? This is not a reality that is sustainable. This is not a reality that is rooted in real value, real utility, real, profit. But it is one that is been valued by hype, pure speculation that's been funded by low interest rates and the environment that the Fed set up for us. But it doesn't matter who you want to blame. What matters is what happens next, which is going to be, I believe, one of the largest pullbacks that we've seen in the market in recent history. And when we look at this chart right here, it really showcases it. Technology relative to the S&P 500 is at the late 1990, early 2000 level. just before the tech bubble burst and a nasty bear market began. The Magnificent Seven will soon become atrocious. A credit event is coming. And the Magnificent Seven is the seven tech stocks that are keeping the S&P 500 afloat. And if it weren't for the Magnificent Seven, the S&P 500 is basically at break even. In real terms, I mean, valued against inflation, it's basically made no gains, right? And so this is the warning that I'm trying to put out for, the regular person that listens to my show. And I just ask that you guys please share this message out far and wide. Get folks tapped in to this channel where we're breaking things down in a simple way for folks to understand. We don't get lost in the technical nuances. We don't dance around. I'm not afraid to tell you how I feel. I'm not afraid to share my speculation. And I just dropped a video yesterday on what I think is coming for precious metals. I also dropped a real estate update. We're not just crypto moon boys. We break this thing down so that everyone can understand the current events, the economic data, and how it is going to impact the markets and what moves I am making. This gives you, a little bit of education, a little bit of an understanding, and you get to watch me lose on some. You get to watch me win, and you get to watch me, make the moves in real time while we try to, basically decode the facade that they are painting here. This picture of the strongest economy in the world, that's going to be the talking point for the next year, while we are getting the rug pulled by the Fed and we're getting the rest of the world turning against us. This is a perfect storm brewing. We're already in the middle of it. And I think that we're going to have a significant pullback in the equity markets. And I just hope that you guys are prepared for this. And if you guys are looking to, protect your 401k, your retirement savings, I'm not here to be your financial advisor. But what I do want to do is provide the education and the content so that you know the right questions to go ask your financial advisor. Say, hey, why are we making such a strong allocation to bonds when they just had their worst year ever? Why are we doing that? Right? Why are we in these stocks that are overvalued or being valued at 200 times profit to earning? And so this is what I'm trying to do with my content. I hope you guys appreciate it. If you guys are looking to pick up precious metals, and you can roll over your 401k to precious metals with my affiliate links down below, or you can go to my website, zachrector.com. We have our precious metals affiliates, which will hook you guys up if you're looking to take advantage of that. Now, with that being said, guys, I'm going to wrap up this session. Please, on the way out, if you could smash that thumbs up. And then all I ask is that you share these messages out far and wide so that we can help save as many people as possible from the financial tsunami that is now hitting the shores of America. God bless all of you guys. I'll see you in the next one. Thank you so much.